Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Scott Melker, crypto trader and investor, host of the Wolf of Wall Street's podcast, and author of the Wolf Den newsletter. Scott, it's great to see you again. Welcome back to Trade Talks.
Thank you so much for having me back.
All right, Scott, I want to talk about energy consumption and crypto. Senator Elizabeth Warren is asserting that we can fight the crypto crisis to crack down on environmentally wasteful cryptocurrencies. How are you responding to that? Because as I understand it, 76% of Bitcoin miners use renewable energy resources. This is according to VanEck.
It's completely misdirection. It's recycled fear, uncertainty, and doubt, and old narratives that just keep coming around every time Bitcoin price drops. And it's interesting to see her talking about that while also talking in the same hearing about central bank digital currencies, something that obviously Bitcoin would be somewhat of a competitor to. And in the same day that we're seeing the president of El Salvador posting pictures of wells blowing off steam for 100% clean and 100% renewable energy used to mine Bitcoin. I think, as you stated, over 70% of miners use renewables. We're seeing a crackdown across China, which is absolutely huge because that means more mining will move out of China into places that take renewables a bit more seriously. And we know that 40 to 50% of Bitcoin is being mined by miners using solely renewables. So the data just doesn't back up what she's saying. It's an old narrative. Things are changing and moving in the right direction already.
Be interesting to see other industries apply what we're learning from using renewable resources with the mining of crypto. Scott, let's talk about Bitcoin and all the other associated altcoins. It really has been somewhat of a volatile month since we spoke last.
It certainly has. It caught me by surprise, to be quite honest. Not the drop, but the size and speed of the drop when it dropped from 40 to 30. And I think that that's the case across the board. But if there's anything you learn from watching markets, it's that they can stay irrational much longer than you can remain solvent, of course. So as much as it caught a lot of people by surprise, I think that people are now comfortable with the range that it's trading in. And to me, it's time to make a decision soon. We know that volatility always returns to Bitcoin after a while, even if it chops sideways like this. So it's going to be interesting to see whether there's more downside in the future. People like JP Morgan are pointing at the backwardation of the futures market that could potentially signal more downside. But I think that the news cycle and the excitement and the positivity is going to outweigh the negativity, and that likely we'll see a break above. But from a technical perspective, I think there's basically nothing to see right now until it's trading above 42,000.
Right. And Scott, perhaps this is just the way the asset class is. Not everything has to trade exactly like a stock or a bond does. Maybe volatility is just one of the characteristics of this asset class.
It is. And what's interesting, I think, if you look back over the last year to 18 months, my friend Mark Yusko likes to quote the fact that Amazon's been more volatile than Bitcoin. So it's not really as volatile, I think, as a lot of people perceive. And obviously, you sort of have this bias towards what you saw 10 or 5 years ago in an asset versus what's actually happening now. So I think that that's also a bit of misdirection, that story. But yes, we always joke that a 40 or 50% retrace in Bitcoin is just another Tuesday, right? It's something that happened 8 or 9 times in the bull run from 2015 up to 2018 when it corrected over 80%. I don't foresee an 80% correction here. I think the narrative is very different. We have institutions. We have guys like Michael Saylor raising another $500 million note. Which is interesting because to me, this is the only asset class that retail can front run an institution knowing exactly what's about to happen. And we saw 1.6 billion in interest on that junk bond raised by Michael Saylor. You know, they were asking for 400 and got 500, but we've seen it 3 times now. You literally know that a $500 million is about to be bought in Bitcoin and can front run that move. And maybe that's what we've seen as price has risen over the last few days.
Yeah, kind of rooting for everyone on the sidelines with that. But are you seeing anything in terms of a decoupling from Bitcoin where the crypto space isn't necessarily as dependent on it as it is? Are you starting to see more independence throughout the space?
I think that is the case to some degree. It's still the king. We call it the honey badger for a reason. When Bitcoin moves heavily in either direction, you tend to see altcoins suffer across the board, which I assume what you're somewhat alluding to. But in the last few years, we've also seen a decoupling of certain markets at a time. For a while, large caps will be performing well. There's been an absolute DeFi boom, and there were times when Bitcoin was moving, but DeFi was moving making much larger moves across the board. We've seen a boom in the NFT space, if you want to consider that a part of the crypto market, that sort of has nothing to do with what's happening in Bitcoin. So I do think we're seeing a maturation of the market and certain assets being able to find their own way, even when Bitcoin is having a mood swing.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.